Hey, good morning. Let's go over today's trade plan. So at this point, we have support at 67 to 69, and as long as the buyers can hold ES above that area, they can certainly remain in control. And that idea that was discussed yesterday about the market just balancing and then breaking out to a new high could still come into play today. We have GDP out in pre-market, 7:30 a.m. Central, and then we have a couple of econ reports after the open as well, consumer sentiment and new home sales, I believe. So those can certainly be a catalyst for a directional move. But overall, we have to keep in mind that, this is a holiday market. We're running on light volume, the ranges are pretty narrow, and the reward potential, like I discussed yesterday, is relatively low. So, there can still be good setups that come out of this, but you just have to be patient and fairly selective on what setups you take. So really, there are two scenarios heading into Tuesday's open that can come into play. One is that the market continues to balance at the highs and then breaks out and perhaps hits some short-term exhaustion heading into 86.5 to 88.5, potentially a little bit higher. The other option is that there is a negative reaction to the news, and we actually break below 67 to 69, which would bring 63, the naked VPOC, into play, and 56.5 to 58.5 into play, where buyers can still be active because overall this market is still very much a bullish market, and a short-term pullback would not change that. So on the downside, if you break below 67 to 69, you'd be short-term exhausted into 56.5 to 58.5, and in the event of some more extreme selling, 50.5 to 52.5 can still act as support, and buyers can be active at these zones below because the overall picture is still going to be bullish. This is a very short-term pattern, even if we break down. So it's not going to reverse, this entire upside day that we had on high volume and a really wide range. So overall, the buyers are still going to be in control, even if we get a slight pullback into 63, 56 half, 58 half, even 50 half to 52 half would not really be a big deal. And most likely, if we do break down, buyers will defend the 56 half to 58 half zone. And this zone below is very high odds, especially if the market goes straight into the zone. On the upside, there is no hard resistance. So as we push higher, 86 half to 88 half is just a range extension target where the market could be short-term exhausted, but it's not hard resistance because the market would be making fresh all-time highs above 76 quarter. So on the upside, if you're able to get long, it's a good idea just to take the profit where the market starts to stall out a bit, just because the volume is so light. And again, these are holiday sessions essentially. Wednesday is a half day. Um, you know, Thursday is off. Friday is off essentially. So given that we're in this holiday market, it doesn't really make a whole lot of sense to get aggressive. And that's why if you are trading this market, it's best to be patient, be selective, maybe take one, maximum two trades a day, and even those should be at very good trade location, and ideally you want it to be in direction of the short-term trend and momentum. So the short side is still going to be tougher to play, and the long side I think is still going to be the easier side. It's just a matter of how aggressive you want to be on the long side. If we're holding above 67, 69, then technically the market would just hold up here and break out. If we break below it, then you want to be a bit cautious, take a step back and let the market get short-term exhausted into a zone before you fade it. But fade setups on the long side should still provide some short-term edge and provide some decent reward to risk. So those are our main ideas heading into the open. This video again is being recorded pretty early, much earlier than usual, about 4 a.m. Central Time. So the overnight range is still developing, so just keep an eye on the overnight range. Again, as long as we hold above 67, 69, the buyers can certainly remain in control, so keep an eye on that area. If we break below that, then the micro bull bear zone would come into play. So those are our main thoughts. Let's see how it plays out. Let's wait for the open, and we'll take it from there.